Hello. So today we'll be talking about the Great Lockdown, the worst economic downturn since the Great Depression, the coronavirus crisis, right? Well, coronavirus, also called COVID-19, has caused a crisis for the global economy and markets, with an escalating number of confirmed cases globally. Actually, this coronavirus is actually a deadly virus that was first, you know, noticed in Wuhan, China. And this outbreak really caused a chaos and panic all over the world, shutting down um, every form of businesses, but short scale and big scale businesses. So people couldn't go to work. There was a total shutdown. People had to stay at home, and actually the market had to crash, right? So we're also told that the World Health Organization declared actually this virus a global, pandemic, meaning that it will have a sustained global impact. And this virus actually took a lot of lives. A lot of people died, and up till now, there's still no vaccine yet. And people are still cautious about their, movements and, security by trying to, you know, protect themselves using, facial masks. Um, a hand sanitizer, and actually trying to keep this social, you know, distancing rule. So many countries, economies already were slowing before the pandemic, and now the COVID-19 threatened to push them into a sleep recession. It pushed the US stock market, the world's biggest, into bear market territory in March. Actually, the market really went down. While the market regained much of those losses, unemployment remains high and GDP growth looks like it will severely, you know, um, be impacted across the globe. So, aside the fact that the market went down, the rate of unemployment was down, down to a form of decline because people couldn't go out, people couldn't even, get to their jobs, not to talk of, going out at all, right? It was really bad. And, when people can go out, people can go to work, of course, there will be decrease in, income or in fact, no income at all. So in response to this crisis, the government and banks actually came to the rescue. There were some funds set up by the United States government actually to just try to support people. But in response to the crisis here, you can see an article that the government and central banks worldwide have, enacted sweeping and sizable fiscal and monetary stimulus measures to counteract the disruption caused by the coronavirus. And we're also told that we should note that all amounts have been converted to US dollars and therefore may have changed slightly due to changing exchange rates. Here are the list of what each country or region is doing. So first of all, the United States of America actually came out with that idea to support small scale businesses. In fact, the whole of, American citizens to try keep them back on, track. Supported them with some funds and other things like foodstuffs and so on. So the United States, the world's largest economy, went into its recession in February 2020. It has taken a broad range of steps to combat the economic disruption caused by COVID-19. Congress passed trillions of dollars in fiscal programs, while the U.S. Central Bank, the Federal Reserve, added trillions of dollars in monetary, stimulus, right? And on July 28, 2020, the Federal Reserve extended the contribution of its lending programs that would have ended on September 30th, 2020, so that they are now set to end on December 31st, 2020. So here's the monetary policy. The first stimulus measures fall into three basic categories, right? Interest rate cuts, loans and asset purchases and regulation changes. So the Fed cuts its benchmark into, some interest rate. The Fed funds rate twice during March 2020, once by 0.50% and the second time by 1%. So loans and asset purchase intervention was more extensive, covering a wide array of programs, right? The simplest assets purchasing program is the quantitative easing, right? So besides direct assets purchases, the federal set up several programs that opened up new specific lines of credit to financial institutions. And on March 2020, it launched a Great Recession era program, the Primary Dealer Credit Facility, PDCF, which will give loans to primary dealers backed by a wide, variety of securities as collateral, right? So there is no set limit to the amount of credit it will issue, but it will only run until December 31st, 2020, unless it is extended further. So this enables large-scale businesses to actually get some loans, um, to that are backed by securities as collateral, right? And to add more liquidity to money markets, the federal government launched the money market mutual funds liquidity facility. In March 18, 2020, this program lends money to financial institutions so they can buy uh, money market mutual funds. So the government actually spread its wings, um, you know, by enabling people to, not give up, cheer people up, and still buy some things and not to just go down due to the coronavirus, right? And the program does not have a specific lending limit, but is currently scheduled to end on December 31st, 2020. And the Treasury Department gave the MMLF $10 billion of debt credit protection for the program. And on June 5th, 2020 as well, the Federal Reserve said that participation in the MMF wouldn't affect the liquidity coverage ratio of participating banks. So it was really bad that the whole coronavirus affected everybody. People couldn't go out, all flights were canceled, people had to stay home, you know, people had to stock everything up with food and provisions and make sure everything is fine so people don't get to go out and have contact with whoever's with the virus. But after some point in time, um, things got better. People started going out with facial masks, with this social distancing rule, and things started getting back better, but not as normal as it was before. And we can also see here that the Fed created several new programs that established legal entitles known as special purpose vehicles to make specific loans or purchase assets indirectly. And on March 17, 2020, the Federal established the Commercial Paper Funding Facility, the CPFF, which purchases short-term debt known as commercial paper to ensure those marketers stay liquid. So the government tried to just raise the business hopes high, try to encourage people to still keep investing and doing stuff so that, the economy will still, keep booming. And the government kept on doing so much. You can see here as well that in April 9, 2020, the Federal announced the Main Street Lending Program, which sets up an SPV that will purchase up to $600 billion in small and medium, sized business loans. The Fed will only purchase a 95% stake of each loan. The bank keeps, 5%. So the quality business businesses need to have 15,000 or fewer employees or have $5 billion or less in 2019 revenue. So they were still taking out of their revenues, and the government kept on, putting in so much just to help people. So there were relief packages. The first relief package, the coronavirus preparedness and response supplemental Appropriations Act as of 2020, since nicknamed Phase 1, was signed into law. So there are packages to help people. It allocated approximately $33.4 billion in relief.